So provision and reserves. Basically, what is this provision? Provision we make for our debtors. Who are the debtors? Those who are our credit customers, right? Those who bought goods from us on a credit basis. So they owes us, okay? That in accountancy it called as a debtors. So when we have a debtor, suppose we have a total 10 debtors, A, B, C, D, E, F, G, H, I. So everyone will pay you, but might be one debtor or two debtor, they'll not pay you full amount, or they refuse to pay, something like that. For that, the business should prepare beforehand. That's why we make these provisions. What is provision means? We are preparing for that. If some of the debtors he will refuse to make the payment, or he'll not make the full payment to us. Okay, so for that we are making a provision. Okay, and for that we need to keep some reserves aside. If we suffer a loss from the debtors, because what happens generally in the business, if we calculated ki we supposed to get 1 lakh, we have 1 lakh from the market, then how that 1 lakh we utilize for the business? We have to pay 60,000 to my creditors, 20,000 I'll use for my working capital to paying a salary and all these. I'm giving a small example, okay? 20,000 I have to pay a salary, rent, and all the business expenses. All this we calculate based on the how much we supposed to get from our debtors. This is the business, right? Business works like that way. So for that, if we are suffering a loss because some of the debtors are not paying the money to us, for that we are keeping some reserve aside. Okay, that's why we have provision and reserves. Now we have in a final account sole proprietor. Under that we have 4 types of provisions and reserves. Okay, which 4 types of provisions and the reserves? See, it's given over there 1, 2, 3, 4. Old bad debts, new bad debts, new provision, and old provision. Now, what is bad debts? Bad debts, everyone knows, right? What is bad debts means? Irrecoverable money. We are not going to recover that money.
Yeah.
What is the bad debts? And provision as in what ki may or may not. We can get also, or we are not getting it also. Right? May or may not.
Yeah.
But bad debts is certain, definite. We are not going to get that money. Okay? That's why 4 types we have. Bad debts old, bad debts new, provision old, and provision new. Okay, so what is the exact rules for this, how we are going to treat this, and what is the rules for that? Okay, if you notice here, I have mentioned old bad debts. Where they'll give in the final account, they'll give in the trial balance. Where they'll give in the trial balance. New bad debts, they'll give in the adjustment. New provision, they'll give in the adjustment. And old provision, they'll give in the trial balance. So if you notice, both the old things, they'll give where? In the and both the new things, they'll give in the adjustment. So that's how you are get to know which one is the old and which one is the new. Understood?
Okay.
How we are going to classify between this old and new. If it is given in the trial balance, it will be considered as a old one. And if it's given the adjustment, it will be considered as a new one. Clear? Okay. So now, what I said, penal account debit side and penal account credit side. Left hand side is penal debit and right hand side is a penal credit, right? So penal debit may what we are going to record and when we are going to record. And penal account credit side, how we are going to record and when we are going to record. For that, there is a condition. What is a condition? If 1 plus 2 plus 3 is greater than the fourth one, then will be get recorded in the penal account debit side. Now, what is 1, 2, 3, 4? It is given. We just discussed. 1 is old bad debts, 2 is new bad debts, 3 is new provision, and fourth one is old provision. If your old bad debts plus new bad debts plus new provision, if these 3 ka total is greater than the old provision, then we'll put in the penal account debit side. Then how we are going to record in the penal account debit side? See, I mentioned over there, first line I recorded over there, old bad debts. In that old bad debts, what I'll do, I'll add the new bad debts. Then I'll add the new provision. Old bad debts plus new bad debts plus new provision. Then I'll subtract the old provision from that. Okay, and we'll then final answer outside. What is the case? If 1 plus 2 plus 3 is greater than the fourth, what is fourth is old provision. Now, other way around. If 1 plus 2 plus 3 is smaller than the 4, means old bad debts plus new provision is lesser than the old provision, then we put in the P&L account credit side. How we are going to record that? First, I recorded their old provision, then subtract old bad debts minus new bad debts minus new provision. That gives you the final answer of the P&L account credit side. Okay. Is it clear? Any doubt? Yeah. Clear?
No, I understood
Can we
this.
start the sum?
Yeah.
Okay, so this is the question number 4. Trading account, P&L account, and balance sheet also I made. And there are fixed lines that I also mentioned: opening stock purchases, sales. And next page may have made the balance sheet. Okay, and the balance sheet also we are fixed for capital and drawings, correct? Now we'll go ahead and start the sum. First one is given furniture to us. 6400. Furniture is a part of a balance sheet, right? I'll just change the color of the pen. Furniture. How much is the furniture given? 6400.
Yeah.
That we need to write inside because we have an adjustment on it. Then what next? Loose tools. Six two 500. Then we have a building. For this also we need to leave a line. And then building 7500, 75000, sorry. For this also we need to leave a line. Then we have capital. Capital is 1,25,000. Okay. Next we have a bad debts. Okay. So now for bad debts, provision for bad debts, and all these things we'll do it at the end. So skip it for the time being. We'll do it at the end. Provision for bad debts also skip it for the time being. Then we have our debtors and creditors that will record over here. Debtors is asset, right? Debtors is 38,000. Leave 3 lines because we have a 2 adjustment on it. One is for bad debts and one is for provision. And then we'll write creditors. Creditors is the liability, 25,000. After that, we have a stock on 1st of April. It means opening stock, right? Stock on 1st of April 22, 34,600. Then we have our purchases. Check, do we have returns? Yes, we have returns. So we'll write this inside, 54,750. And sales is 1,54,500, correct? 1,54,500. Returns, see, this is purchase and this is sales. So next we have a bank overdraft, 28,500. Bank overdraft is what? It's given on the credit side. Income or liability? Bank overdraft is a liability, right? Bank OD. Bank OD is 28,500. Then what we have next? Sales and purchase return. Okay. Sales and but this is the sales return 2,000. So that I'll subtract from sales. Less return 2,000. And this is purchase return 1,250. So I'll subtract and put it out. 54,750 minus 1,250. 53,500. 1,54,500 minus 2,000. 1,52,500. Okay. After that, what we have? We have a stationery, 4,500. We have one adjustment on stationery also, no, I guess. Yes, half of the stationery was used by proprietors for personal use. So we'll tick mark on stationery. And stationery is a expense, right? So P&L account debit side. Stationery 4,500 inside and leave one line. Then interest account. It is given on the debit side. Means we paid the interest. One 8 is 0. Next, we have a commission. It's given on the credit side. Credit side means it's not paid, it's received, no?
Mm-hmm.
The received commission will come on the credit side. By commission. 3750. Then we have a cash in hand. 6500 cash in hand is an asset. 6,500. Then we have this taxes and insurance, 12,500. That's a part of P&L. Tax and insurance. 12,500. Leave 2 lines because we have 2 adjustment on it. Then we have general expenses. That is also part of P&L account. 7,820. Then we have our salaries. For that also we have our adjustments, 33,000. Okay, our trial balance is completed. Correct? Any doubt in this? So yeah.
No, I got this.
Okay, now we'll go with the adjustment. What is the first adjustment? Stock in hand on 31st March. Stock in hand on 31st March 23 was 32,500. Closing stock. So we have to record closing stock 2 places because it is given in the adjustment. First over here, bottom of the account of trading account, 32,500 closing stock. And as per the rule which I given it to you, income increase, trading account credit side is the income side, income increase is a good sign for us. That's why second effect on the asset side. 32,500. Correct? The first thing is done. Second one, depreciation building 5%. So we'll subtract from building depreciation 5%, 75,000, 5%. 3,750. 71,250. Furniture 10%. So we'll subtract from furniture 10%. 640. 5760. And loose tools 50,000. So it was 62,500. They say ki loose tool revalued at 50,000. It means it become 50,000, correct? It means it is depreciated by 12,500. Right, Sia? 62,500 was the original figure. It become 50 means 12,500 is depreciated. Correct? Now, all these things are what? Asset reduced, right? Depreciated furniture, loose tools, and building. In all cases, asset depreciated. Asset depreciation is a bad thing for us, and all bad things we record P&L account debit side. No? Depreciation on furniture 640 and building. How much we charge on the building? 3,750. And on loose tools 12,500. Correct? Any doubt? Second adjustment is done. Salaries of rupees 3,000 and taxes of 1,200 are outstanding. Salaries of 3,000 outstanding. What is outstanding means yet to pay, right? So we'll add outstanding 3,000. So it become 36,000. Similarly, they say for tax also. How much they said for tax? 1,200. So we'll add to tax also plus outstanding 1,200. In expenses increased. Expenses what? Increase by 3,000 salary and 1,200 from tax, right? Increase. Expenses increase is a bad thing for us, right? So bad things will go here. Outstanding salary. It's a liability because you had to pay now. And
Yeah.
taxes 1,200. Okay. Next. Insurance amounting rupees 1,000 is prepaid. Prepaid means we already paid. So that we need to subtract. Prepaid 1,000. Then what were the tax balance? 12,500 plus 1,200 minus 1,000. 12,700. Okay. And second of all, prepaid. Now expenses decrease here. Expenses are decreasing. It's a good thing for us. So good thing we record on the asset side now because good is asset. Prepaid insurance 1,000 rupees. This is done. This is also done. Now this is the most important adjustment. Write off further bad debts. Further bad debts of rupees 1,000. Right? So bad debts we always subtract from what? Debtors. This is the new one. 1,000 rupees. So when we subtract that 1,000 rupees, we'll get the updated balance of debtors is 37,000. Correct? Now, provision for doubtful debts to be made equal to 5% on debtors. 5%. So 5% will subtract less provision. This is the new one. They said 5%. Now 5% of which balance? It's not on 38,000. 38,000 was the original figure, but updated balance we got 37,000 and we always charge the provision on the updated balance. 37,000 का 5%. 37,000 into 5%, 1850. So 35,150. I'll repeat. First, I subtracted the bad debts, which is given in the adjustment. 38,000 minus 1,000, that gives you 37,000. So provision I always charge on the after subtracting bad debts. What is the balance I'll get on that updated balance? Okay. So 37,000 ka 5% is 1850. Then I got outside figure is 35,150. Now, while giving the second effort of this bad debts and provision, we need to check that what we have just discussed at the beginning of this session. I'll write here OBD. OBD means old bad debts. Then I'll write FBD or NBD. Means new bad debts or further bad debts. Then I'll write here new provision. And then I'll write here old provision. And as we noticed in the discussion also, old one they'll give where? Trial balance, and new one they'll give in the adjustment, right? Check in the old bad debts. What is given in the trial balance? See here, old bad debts. How much is that? 1250. Old bad debts. That I'll write here. 1250. Further bad debts. We just subtracted from the data. This further bad debts, 1,000 rupees, which is given in the adjustment 1,000. New provision that we just calculated here, 1850. So what I'll do the total of these three first and check what is the amount coming. 1250 plus 1,000 plus 1850, 4,100. Okay. And now check the old provision. See, this is the provision. Old provision always they give in the trial balance, right? 2,000. 2,000. So 4,100 is but obvious greater than the old provision, right? So what is a formula I told you, what is the equation I told you? If 1 plus 2 plus 3 is greater than the 4, so 1 plus 2 plus 3 ka totally we got is 4100 and 4 1 is 2000. So this is greater, right? So when it is greater, where it comes? Penal account, debit side, right? That we discussed. So it will come to the penal account debit side. This is a continuation of penal account. So how do I write here? First, I'll write to OBD. OBD means old bad debts, which was 1250. Then I'll add FBD means further bad debts. That is 1000. Then we add new provision, which we calculated 1850. And from this, we'll subtract the old provision, which is 2000. So total is coming 2100. Any doubt this in this here?
Oh, no.
OBD plus FBD plus NP minus old provision, 41. Correct? Now, this is done. Now, last adjustment, half of the stationery was used by the proprietor for his personal use. So the stationery which we are showing here, 4500. From this, half he used for his personal purpose. So that will be considered as drawings. 4500. 50% is 2250. It means outside 2250. And this is drawing, right? That will be get added to the drawings. Drawing balance was not given to us. So this is the drawing 2250. Clear?
Mm-hmm.
Now we'll start closing the account. First, I'll close the trading account. Credit side is heavier. 152,500 plus 32,500 is 1,85,000. From this 1,85,000, I'll subtract 34,600 and 53,500. 96,900 is a GP. Correct. 96,900. To gross profit. This gross profit we record over here by gross profit 96,900. Okay. Then we close the P&L account. $96,900 plus 37,3750 is 100,650. 100,650. From this, I'll subtract all these debit ones. Minus 2,100, minus 12,500, minus 3,750, minus 640, minus 36,000, minus 7,820, 12,700, 1,180, and 2,250. 21,710. Correct? 21,710. 21,710 is your net profit. This net profit will get added to the balance sheet. Means capital. NP. 21,710. Okay. So drawing will be get subtracted and net profit will get added to the capital. One 44460. Okay, plus 25,000, 28,500 plus 3,000 plus 1,200. It's 202,160. Correct. 202,160. Now we'll check the asset side. 5760 plus 50,000 plus 71,250, 35,150, 6,500, 32,500 plus 1,000. Correct? 202,160. It's supposed to be matched. It matched. I hope you're clear with the provision and bad debts.